Hello and welcome to our latest investment update as of June 26, 2020. I am Mark McCarron, Wescott's Chief Investment Officer. And in today's edition, we're going to give an update on the market through June 26th. We're also going to give an update on the virus and the implications, both the economic and the market implications of that. And finally, as we typically do, our current outlook. So let's first look at the market through yesterday. In fact, today, the US job market is improving. We're getting numbers this week that is stabilizing. But as we talked about last time, millions of people are still receiving unemployment benefits. And while it's stable, we're not out of the woods yet. There are, however, signs of improving economic activity. And this comes despite news of increasing case counts of the virus. So we're going to address that shortly. I think the summary here, though, is that while cases of the virus may continue to rise, another full global lockdown is unlikely. And we'll address that also later in the conversation. So a quick market update through June 26th. So the second quarter is nearly finished. The recovery that we've seen in the second quarter has been dramatic. The first quarter decline of over nearly 30% has nearly fully been recovered. And if you look at the S&P 500, which is the blue line here, it's nearly erased all losses for the year. However, the equal weighted index, which is a broader based index and less dependent on the largest stocks in that index, has continued to lose ground, lost ground a couple of weeks ago and hasn't really recovered. And I really think that shows how disparate and different the return expectations are based on the uncertain outlook. Clearly, those companies that are under pressure, given the current environment, continue to be under pressure. Whereas those that are striving and doing well, thriving during this period of time, continue to drive markets higher. So the return differential that we're seeing between value stocks, which tend to be a little bit more economically sensitive, and growth stocks, which tend to be less sensitive, continues to widen. And we're seeing that in client portfolios. However, I would say that the Wescott balanced portfolios have provided some nice stability throughout this period of uncertainty. If we follow the market's move, generally, a balanced portfolio would have done a little bit better on the way down and have recovered more on the way up. And again, nearly erasing most of the losses occurring so far in 2020. So with the market recovering, we wanted to spend a little bit more time on looking at the virus. And if one were to look only at the markets, it might be surprising to see that we continue to see global confirmed cases of the virus climb. This data is from Johns Hopkins Coronavirus Resource, or the COVID-19 Case Tracker. And this data is as of June 26th, today, as of 7:30 this morning. And the number of global cases is now approaching 10 million. It's at 9.6 million today. And this comes at 3 months, really, after the world woke up to the realization that the novel coronavirus was spreading globally, and it's resulted in pretty sobering numbers. So not only are the global confirmed cases close to 10 million, but sadly, global deaths are rising and continue to rise globally, both here and abroad, and are close to 489,000 or 490,000 nearly. And that is hard to take and hard to put into economic terms or even personal terms. Of course, this is becoming a pandemic that most of us know someone or have been impacted directly or indirectly by someone with the disease and with the virus, and it's touched all of us. The fact that There's been an increased amount of testing capacity in the US, I think is very, very important. And we wanted to highlight that number as well. So the total test results that have been taken in the US is now well over 29 million. And that's a positive. And one of the things we wanted to highlight today is that the CDC mentioned earlier this week that actual cases may be much higher than the reported confirmed cases, and this again provides some sobering statistics. These are global numbers pretty much, but in the U.S. there are 2.4 million confirmed cases as of today, with about 124,000 deaths as a result of COVID-19. And that represents just over 25% of the total death count, which is, again, a sobering number. So more testing, while contributing to more confirmed cases, does allow for a better and more effective containment strategy for state governments. And I think that's really important because, as this chart shows, as global economies open up, the number of global daily cases have continued to rise, and now are rising at a rate of 185,000 per day. That's globally. And today's news, we heard that the US has reported 40,000 new cases, which is an all-time high for a daily count. So the concerns of a second wave, or I would say maybe a continuation of the first wave, are valid. And the fact that we might have this case may lead to a slower economic recovery than many had hoped for. And it really is this new case count, daily case count, that could threaten the pace at which states will reopen. So all of this really does point to the importance of the fiscal and monetary stimulus that the US has provided in the midst of the stay-at-home orders and the global lockdown. Despite all the virus statistics we just went through, we are seeing a nascent economic recovery. It's beginning to take hold. So what we're showing here in this chart on the left-hand side is a trend in personal income. And on the right-hand side is the trend in personal consumption. So what we're seeing here is January, February, March, April, and May. And in April, personal income in the US grew 10% from the previous month, which reflects the federal economic recovery payments, which were distributed in that month. And what's interesting to see is that that was a one-time payment to households and employees, and that's dropped back from where it was in April. But interestingly, consumption, so this is what people are spending their money on, dropped 6.9% in March, dropped another 13.6% in April, but following the significant personal income increase in April, personal consumption has rebounded in May. And this is really important because personal consumption accounts for nearly 2/3 of economic demand, or GDP, in the US. And that's really what's driving the markets. The markets are looking at these trends, and with the backdrop of the virus headlines that we're reading about every day. And really, when it comes down to it, and what our outlook is that we believe that governments will try to limit the spread of the virus, but do so without imposing strict restrictions on the economy. So while social distancing measures will still be necessary, which include wearing masks in restaurants and stores, we also see economic activity picking up and continuing to pick up going forward. And that really leads to our view that we see and expect to continue to see what we call the U-shaped recovery in the economy. But unfortunately, uncertainty around the number of new cases and the impact of that on spending and consumption going forward will continue to drive market volatility. As we talked about in the past, we continue to look for ways to make the portfolios more defensive, higher quality, and more resilient during this time, but also prepared for the next environment. And we continue to do those adjustments to your portfolio today and going forward. So finally, and as usual, thank you for joining us and for your confidence in Wescott. Please do not hesitate to reach out to me or your advisor with any questions. Thank you.